I had a whole bunch of weird paranoid suspicions about what the hell was going on because there was a lot of stuff I couldn't understand. And nobody was really bothering to explain it to me. And and I formed a bunch of opinions about the town and about the people in it that were like, surely that couldn't be. And then you find out later on the track that you are exactly on track.
All right, I'm here with Marcelo Prates, and he is a central bank researcher, most specifically about central bank digital currencies. And I'd like to open the floor to him to talk a little bit about his background.
All right, good to be here. Thank you, Peter, for inviting me. Yes, as you said, I've been a lawyer with the Central Bank of Brazil for more than 20 years now. And, at the Central Bank, I worked with a host of different topics, from litigating cases in federal courts to providing legal advice on issues related to financial regulation, payment systems, monetary policy, and financial technology. More recently, after completing my doctoral studies at Duke Law, this happened in 2018, I've been exploring how technology is changing money, payments, and financial intermediation, and what these changes mean for central banks, for banks, financial institutions, and for all of us. So as you said, I've been writing about these topics, from law review articles to blog posts, and I write a regular column for CoinDesk, which is this US news and information site about digital currencies and the future of money. So that's my background.
Great. And as our news cycle starts to talk more and more about central bank digital currency, you have the digital dollar getting talked about in the US context. What is your specific definition of central bank digital currency, or CBDC?
Yeah, it's interesting because it seems that the more we talk about CBDCs and the more things appear about CBDC, the harder it gets to understand what we're talking about, because it seems that different people have different ideas and concepts about CBDC. So I would say that a good starting point is to look at the two types of money that central banks issue today. So let's talk what is happening today. Central banks issue all around the world, they issue two types of money. One, which the public holds, we hold as the general public, we can hold this type of money, which is the physical currency, the banknotes circulating in the economy. So this is more popular, and we know we associate this type of money with the central bank. And the other type of money, which is already digital, those are the central bank reserves. And then we, as the public, we do not have access to this type of money because this money is restricted to the banking system. Only the banks exchange these reserves between themselves and with the central bank. So in this way, CBDCs, or central bank digital currencies, they already exist. They are these reserves. The banks, the commercial banks, they have accounts with the central bank. They have a basic, we could say that, put it that way, they have a basic checking account with the central bank, and they use this digital currency, these reserves, between themselves and with the central bank. So I believe that the most important question that we could bring about CBDCs would be to ask, okay, who has access to these reserves, and how can we have access to these reserves? So that's the real debate around CBDC. So the definition, sometimes we will say that it's a direct claim of any person on the central bank, but I think it would be easier if we saw the debate around the CBDCs as a debate about who can have access to these digital currencies already issued by the central banks to reserves. So, and I think this is one aspect that sometimes people get wrong, because CBDCs are not about making money digital. Money is already digital for many of us. 9 out of $10, and that's the same reality in Brazil, in the European Union, in the UK. They are already digital. They circulate in the economy in the form of bank deposits. The savings you have at a bank, or the money you use to make a payment, drafting from your balance with a commercial bank, money is already digital. More than 90% of money circulating is already digital. So making money digital is not what CBDCs will bring to the general public and to the general debate. Is how, or if we should have, as any person could have, the access to a central bank account and have access to these reserves. So I think that's the way I would frame the debate around CBDCs.
Yes, and the benefits that you're talking about there, this direct access, where you can open up the central bank already digital currency to everyone else,
exactly,
presents a lot of promise, but also this is where it presents a lot of problems for existing systems. So this is where the conversation moves towards, well, there's the definition of direct and indirect, or two-tiered system, where you still leave that intermediary there. So what is your opinion on how should we develop going forward?
Yes, the direct model would be this basic checking account directly with the central bank. That does not mean that the central bank would turn into a commercial bank. So you have, first, the central bank would not be involved in credit allocation. Not even overdraft should be allowed in this basic checking account. It would be really a basic checking account, so that you could have your money deposited with the central bank, maybe a basic digital wallet on your phone, and make payments from one central bank account to another central bank account. That would be it. And how could we have access to these central bank accounts? We could use, for instance, something that is already being used in these open banking initiatives. We could use all these APIs, so that the central bank would still have the central ledger, but the way you can access and make transactions, this would be done through software provided by private parties, commercial banks, fintech firms. The central bank does not have, it's not because the central bank is offering a basic checking account that the central bank has to deal with all these customer relations. The central bank could just provide the basic checking account and let private parties do make this process of accessing and using the CBDC easier for the people holding CBDC accounts. So this would be the direct model of CBDC, a basic checking account with central banks. The indirect model would be having an intermediary between the central bank and the public using the digital currency. But then we should ask, isn't this model what we already have with banks, with commercial banks intermediating this access to money, to central bank money? I mean, I don't see a lot of innovation coming from these indirect models, because if you think about a two-tier system, it's just, okay, you have access to, you still have your checking account with a commercial bank, and you don't have access, direct access to the central bank. The same thing could be said about the synthetic model of CBDCs, which would be like a narrow bank model of banking. You would deposit your money with maybe a fintech firm or even a commercial bank, and the bank will deposit your money directly with the central bank. So we already have this model. Is basically, this is the electronic money model that we have in the European Union, in the UK, and in Brazil, it's the same model. And my problem, and I understand that these indirect models, they were created to avoid some of the problems that could be caused with a direct model of checking accounts with the central bank, because, and the main problem here would be disintermediating banks. We could say, okay, but if anyone can have a basic checking account and deposit their money with the central bank, how will banks get funding? So if most of the deposits flow from the commercial banks to the central banks, now maybe we could create a problem of financial stability, not solve the problem of financial instability, but instead we could end up creating this problem of instability, because if banks do not have funding, they cannot make loans. That would be a problem. I think we have, central banks have ways to solve these problems, but for now, let's just have this, I don't know if it's clear, this difference between the direct and the indirect model of CBDC.
Yeah, I think what we've been getting at is there's what's commonly referred to in the CBDC discourse as the direct and indirect model, but there's the platform model that the Bank of England talks about specifically that you're getting at with open banking. And that seems to be wedding both together so that you can have sort of a variety of different providers accessing the central bank balance sheet, which everyone has their CBDC on, versus just intermediaries utilizing that, and then everyone else gets to access the balance sheets of those private actors. So I think that's a critical thing to get everyone's head around, is that there is a third option and there is a way to kind of compromise between the two.
Exactly.
I would say too that there's a foundational principle that seems to be glanced over in a lot of the discourse, of that when central banks and states are issuing currency and the advent of central banking coming on, it was always assumed that you had these physical notes and coins that you could safeguard yourself, and that you had the option to voluntarily access a bank or some sort of investment related institution. Now, as you say, 9 out of $10 is all digital. We're moving to an economy that is totally digital, that it's almost prohibitive if you do not have access to that. We've not dealt with that idea of implicit within the structure of a central bank and currency monopoly is that the public has a right to have their own money without being coerced into using a private actor. So under a CBDC, where we don't really conceptualize this and we do a two-tier model, what you're essentially doing is you're telling citizens, you need to use this subset of banks to conduct your financial life. And I'd like to get your thoughts on that.
Yeah, no, and it's not that we have these, we can talk a little bit about monetary sovereignty and this monetary monopoly. It's not that the only type of money that should be available to the public would necessarily be public money, the money issued by the central bank. I don't think we should, that's not, we are not going after that. We could still say, okay, the sovereign money, so central banks should have this monopoly over the sovereign money. But private parties, private fintech firms, maybe even big tech firms, they should be allowed to offer a private alternative, a monetary private alternative to this, to the sovereign money. I'm in favor of that. I don't think that would be a problem. I think monetary competition would be interesting, and then we can even see how cryptocurrencies, although they are still far from being used as a type of retail money for everyday payments, but I think it's good to have these alternatives. First, to avoid sometimes this monetary mischief that central banks or governments will abuse their monetary power. So if governments and central banks, they know that private alternatives already exist and anybody can use as these private alternatives as a type of money, I think they would have more incentives to take care of this price stability mandate and to be more careful around money issuance and especially around monetary financing. So I really I don't see a problem with monetary competition, but as you said, at the same time, I think people should have this public option available. Why? Because you can think about a scenario where most money is privately issued, these cryptocurrencies, digital currencies from fintechs or big techs. And if this type of private money gets too expensive, many people can get, they would be deprived of this digital money and payments, which, as we saw during the coronavirus pandemic, as we've seen and we still see, if you don't have access to digital money and payments, you are not a full citizen. Because especially in times of crisis, it's during the pandemic that we could not face-to-face interaction was not an option in many instances. If you don't have this option of a public digital money, this could be excluding a great part of the population from the economic life as it is today in the increasingly digital world. I believe that at least one public option of digital money and payments should be available to anyone. And more than that, many persons, maybe they would prefer to have, instead of having in the future a Facebook coin or a Google coin or something like that privately issued, or even Bitcoin or another type of cryptocurrency, I think some people could just say, okay, I just prefer the basic sovereign money issued digitally by a central bank because I trust that this central bank will do a good job in keeping the price stability of these sovereign money. So my option, I would prefer to have this public option instead of any other private option. So I believe we could see in the near future some the increase of this monetary competition. But in any case, I still believe that there is a role for the central bank and for a public version of this digital money and payments. I think they are needed. They are required in the digital world we live in.
Yes, and what you seem to be getting in that description as well is a illustration that you also did a great job of describing in your sci-fi series, projecting what the future of digital currency
yes, exactly.
be. And you basically break it down to those three groups of, you have the government central bank issued currency system, you have the big tech alliance, which is just the multinational big corporate coins, and then you have the decentralized sort of anarchist coins, and you have these three systems on a global scale kind of interacting with one another. And could you speak a little bit more about that?
No, yes, we're talking about two pieces I wrote for CoinDesk. It was the beginning of this year. And I was trying to imagine how could be the future of money in, I don't know, 5 or 6 years from now. And looking at these three options, I can see, looking from today's perspective, I can see three kind of options. Central banks starting to issue these central bank digital currencies, offering this public alternative to digital money and payments. We could have these cryptocurrencies for a specific group that could create their own, with the advance of technology, they could create their own version of a cryptocurrency used inside this specific group. and we could have what I imagine is something that can really happen, a digital currency issued by one of the big techs with and I'm not talking here about just a stable coin denominated in a sovereign, I mean, backed by a sovereign currency, but no, a completely unbacked digital currency issued by one of the big tech corporations that could be easily, they could easily reach 2-3 billion people very fast because they already have the platform to offer a digital currency that they could think about issuing. They could quickly offer this version of a digital currency at the retail level, especially if we talk about Amazon, for instance. They already have a platform and a marketplace. If they add their own digital currency to this mix, the potential for adoption is great. So that could be another alternative for digital currencies and digital payments. So it's always hard to make predictions, but I think we will see in the near future some kind of monetary competition, and as I say in the articles, maybe some kind of monetary wars, different actors trying to offer a dominant type of digital currency. But let's see. For now, it's just sci-fi. It's an exercise of trying to understand what is going on right now and what can happen in the future. But I think we will see some kind of monetary competition in the near future.
Yes, and certainly these things need to play themselves out. One of the things that's interesting about both examples is that when you have these monetary wars going on, the central bank digital currency has borders. It is
exactly
supremely, aside from a few cases, a national context, whereas either the decentralized cryptocurrencies or now the multinational corporation currencies, they represent more of a globalized system. And this is where you get into the debate between, well, what is best for cross-border payments and what is best for your kind of on-the-ground retail?
Yes, because we can, there are a lot of criticisms that we could make about Bitcoin, for instance. But the beauty of Bitcoin, I see as offering this type of, it's not backed by any sovereign currency, Bitcoin is not related to any sovereign jurisdiction. So a Bitcoin in my Brazilian wallet is the same Bitcoin that you can have in your Canadian wallet or in your Japanese wallet, and I can transfer the same type of money without making any conversions from my wallet to an Argentinian wallet, to an American wallet, to a European wallet. And this, it makes it easier for this type of money to cross borders. And for central banks and for governments to get to this kind of coordination, and have one global digital currency issued, we could think about issued by the International Monetary Fund, for instance, that could be used without borders and in any country with the same unit of account, with seamless transfer between wallets, wherever in the world you are. The level of political coordination among nations required for us to get to a model similar to what Bitcoin offers today is hard to imagine that we will get to that level of coordination anytime soon, because the Financial Stability Board, they have been discussing about these problems and frictions around cross-border payments for more than 10 years or so now, but it's hard. It's not something that you can solve with technology only. It's a political issue as well, and without reaching this level of coordination among different nations with different kind of interests, it's hard to get anything close to what a cryptocurrency like Bitcoin can offer. Of course, even if and although Bitcoin could be used as a type of money for cross-border payments, it still fails when you look at domestic use and for retail transactions. It's very few places take Bitcoin as a medium of payment. So although it works well, I think it has some potential for cross-border payments. They could not solve this problem for national use, for retail payments and everyday payments. So it's, and maybe this is where the central bank digital currency can offer something that Bitcoin cannot offer for everyday transactions, for everyday payments, although you have this different model that would work better for cross-border payments. For domestic transactions and everyday payments, I think central bank digital currency could still offer something more interesting than what Bitcoin can offer today.
Yes, and while we're dealing with a concept that is very new, you know, the idea of a globalized currency standard and system, you know, that's an old idea. Not so much of even, you know, a metallic currency standard of the more 19th century, but even when Bretton Woods was getting set up, you know, the idea of Bancor, you know, a globalized currency that might have been started then was not pursued because of reasons around, well, does that take away monetary sovereignty? And what are the economic schools of thought that each country is going into this discussion with? So I guess this is where it really becomes apparent that there's the obvious utilitarian approach to, let's say, the IMF setting up a, you know, a cryptocurrency for everyone, or not a central bank digital currency for everyone.
But which they already have. If we look at the SDR, it's already a digital currency, but only used between the IMF and the central banks of the member countries of the IMF. So they could set it, I think, relatively with, it would not be difficult for the IMF to set a digital, a kind of a sovereign global digital currency. It would not be that difficult. But again, the level of coordination required to get us from here to there, that would be the problem.
Yes, and when it comes to those competing economic schools of thought, and those also might be buffered by, you know, what is the current development status of each country? Whereas, let's say one nation seeks to have more control of their monetary system in order to devalue their currency, or, you know, provide stimulus in the form of development banks backed by the state. How would those countries differ with their utilization of a CBDC versus, let's say, United States or you know, the Euro Central Bank, where you have these macro structures over sovereign nation states?
Yeah, and I think we already have an example happening right now in the euro area. You have these important countries from and these countries they used to have important currencies like the German mark or the franc, the French franc, and they kind of let this regional currency they adopted this regional currency instead of their own national currencies. And this type of monetary integration without fiscal integration, and I think that's the hard part, to get to this like a common global currency. The example of the Eurozone, I think it's interesting when we are trying to think about this global digital currency, but it's not something that will come too easy, I believe. And we have these many examples during the 2012 European crisis, with the potential exit of Greece, and how that was difficult for Greece to Greece did not have its own national currency, so it could not devalue the currency to face fiscal crisis. So yeah, I don't know. It's something that we will. It's hard to figure out how to implement something like a global currency.
Yes, and when it comes to like thinking about theories around monetary economics, one of the other big trends, aside from CBDC in this current time, is modern monetary theory. And while it has a lot of contention around it, being that it is unquestionably a ascendant theory, how do you think that complements or doesn't complement CBDC?
Yeah, no, because my view about money is informed by central bankers. So I'm a lawyer. I'm not an economist. So my views I have this more like, it's not an economic view of money, but an institutional and legal view of money, and because of that, I am a bit skeptical of the MMT proposals, and I think essentially because of two reasons. First, I believe these some of the MMT theories, they forget that the authority, the national authorities that have the power to issue money, those are the central banks, not the government itself. It's not that the government can issue money. In fact, in all developed countries and even developing countries, and especially in countries that have an independent central bank, the issuance of the sovereign money is in the hands of the central bank, not in the hands of the government. So, and this sometimes this distinction is not clear in some of the MMT proposals. They kind of assume that the government can just issue money as the government pleases, and that's not really true. When we look at the institutional arrangement, the modern institutional arrangement around money in most countries today, the central bank, although the central bank is still a governmental institution, it's in the hands of the central bank to issue money with the goal of attaining price stability. So, and that's the second part of this institutional and legal arrangement, is that money issuance and government financing are separate functions and actions of the state. So the central bank does not issue money to finance the government. The central bank issues and manages money to attain price stability. So the goal of the central bank is not to create money to finance government needs or to provide funding to the government. So that's and this has been in place since the 1920s. This separation between money creation and government funding and government financing, and I don't see that. I think that some of the MMT proposals fail to appreciate this distinction between the central bank and the governments.
Yes, well said. There is there's certainly a lot of things that still need to be kind of ironed out with the people that propagate that theory, and sort of even the other side of the debate that doesn't fully understand. But it seems like you're really getting at that that actual distinction with the central bank, that it's independent for a reason. And, you're really resurrecting a different sort of structure. But moving on to something that is almost kind of a little bit different. It's not the sovereign currency, let's say, or like you said, the state could have different versions of currency. You proposed a plan called Money to the People, in an article that would represent a different unit that would be given to employers to fund wages during emergencies, let's say the COVID pandemic.
Yeah.
And how exactly does that plan work? And just to say, I think it's very innovative, and you're kind of reverse engineering the way that money is usually distributed.
Yeah, exactly. No, it was in the right at the beginning, or I think it was at the beginning of the pandemic, and this is another article for CoinDesk, and it was at that time that commercial banks, did not have enough liquidity, or they didn't want to lend money, or they could not lend money. So you had this liquidity problem with the because in times of crisis, liquidity dries up and banks say, okay, let me see what's going on. I'm not sure if I can lend money right now. And at the same time, even the relief money that would be sent to people in need in the United States, legislators were discussing in the United States, okay, should we send paper checks to people, because we don't have a banking account information. So it seemed that we'll have to mail checks to people, and this could take, I don't know, not even weeks, but months for this relief money that was needed at that time. It would take months to arrive to the people in need. So I thought, okay, since we are talking about central bank digital currencies, since it seems that we already have the technology to create money in a different way and to provide money to the economy in a different way, why not, as you said, why not reverse the process? Instead of the central bank issuing money and then this money going through the banking system to the real economy, why not create this type of central bank digital currency, temporary, for times of crisis, that could be issued directly by employers to their employees during this crisis? And then it would be the reverse movement. Employers would pay their employees with this kind of emergency CBDCs. Employees would be able to make purchases and make payments for essential goods and services. They could use the CBDCs to pay for groceries, to pay their rent or something like that. And then this money would arrive at some point. People could deposit this money, this emergency CBDC, with their commercial banks, and then commercial banks would finally move, exchange reserves on a parity basis, on a one-on-one rate. They could exchange this emergency CBDC for reserves, and then the central bank would finally get these emergency CBDCs out of the economy. So it would be money in reverse, and I thought it could be something that would avoid many layoffs and furlough of employees, which we saw happening, and the unemployment rate picking up in the first months of the pandemic. And this would, I believe my argument is that this would give governments the possibility to act first and then figure out what to do later, because you first authorize these employers to make the payments, to put this money in the economy, and then only when this emergency CBDC, only after it reaches the central bank, that the governments will decide, okay, this is a monetary stimulus, or this should be framed as a monetary relief. And so this emergency CBDC should stay in the balance sheet of the central bank for a while, because maybe the government would not have the fiscal space to make this a fiscal injection of money. Or if the government had the fiscal space, they could simply, the central bank could move these emergency CBDCs from their balance sheet to the balance sheet of the government, and then this would be considered a fiscal stimulus or a fiscal relief, sending money for people in need. So it was, it's hard to explain. Maybe if anyone is interested, should take a look at the article as well. I think it's better explained there. So it could be an interesting read.
Yes, and one of the questions I came away with it was, why are we so beholden to the idea that if we're doing any form of stimulus or relief, there needs to be this conduit where we go to the banks first and the banks need to distribute it. And of course, everything in between, their decision-making, their ability to get the money out there, the business's ability to go to the bank and make themselves visible in order to access it. That almost seems like such of a half measure versus your approach, which is, go directly to the source. And there's the obvious criticism that could be made about, well, do we want to give that money creation power to, any old business? But there does seem to be an authenticity to going directly and prioritizing wage payments versus, exactly. First, then you have to take out a loan, and then the business itself has to then decide how to distribute that loan in the form of wages.
Yeah, no, in a way, this same process happened, but through the traditional channels. The Fed in the United States started buying a lot of securities, starting buying a lot of different types of assets issued by not only by the banking system or commercial, even commercial paper. The Federal Reserve was buying these private securities as well. But then, as you said, we can debate this. Okay, but if the central bank can do that, why not put money first in the hands of the persons in need, and then hope that this money will flow and be distributed in the economy? Why we are always, the central bank is always injecting money through the banking system to institutions and private institutions, and then hoping that this money will get to the persons in need. So, and maybe I think this is the first time that we have the technology to create these different types of money and these different types of issuing and managing money. So with the technology that is now available, maybe we could think about different ways of central bank injecting liquidity in the economy, and if especially in the United States, it's also a goal of the central bank not only to maintain prices stable, but also to get to full employment. So employment is also in the mandate of many central banks in the US, especially, and now we have a new law of autonomy in Brazil, and it's also a goal that the central bank of Brazil should pursue right now, the full employment. So even the legal mandate to take an action like this one, the central banks, some central banks already have the legal mandate to do so. So I think this could be framed as an initiative on a central bank action in favor of full employment. So even the legal mandate would be there.
Yeah, the justification was always there. We just didn't see it. But yeah, so as we approach the conclusion here, I think I'd like to go over one more hot button issue when it comes to CBDC, and that is privacy. And I think there's a lot of obvious problems when it comes to trying to preserve any privacy when it comes to a system like this. But again, there's nuance to everything. So could you explain what your view on privacy of CBDC is, and what is the role of the government in, getting warrants to review things, of working with intermediaries to provide AML, KYC, all of that?
Yeah, no, I mean, it's an important issue, no doubt, but I think we are approaching the issue of privacy in the wrong way. I think the first step is to acknowledge that absolute monetary privacy, this will not exist. As a society, we kind of decided that private Swiss or secret Swiss bank accounts are not beneficial. So these are not beneficial for society, with all the concerns we have with money laundering, the financing of terrorism. So this type of, because sometimes the debate goes around this, we want absolute monetary privacy. We can do whatever we want with this digital currency, no matter if it's issued by the central bank or not, but we should have absolute monetary privacy. I think this world does not exist anymore. That's not something attainable. No central bank will create a digital currency that is 100% anonymous and private, and that can never be, the encryption can never be broken. That central bank is a governmental institution. Of course, at the same time, it's not for the central banks to keep track of every transaction, a monetary transaction, every payment I'm doing. The central banks have no business in investigating this specific and individual transaction. So, but I believe that the combination of technology, the rule of law, and judicial protection, the judicial review, I think we can find a way of providing a relative privacy protection. And what does that mean? Maybe up to a certain amount for smaller amounts, let's say $3,000. The central bank should offer a powerful and a robust encryption of these digital currencies, so that it would be impossible to even for the central bank to know what's going on until this limit. After this lower limit, I believe encryption should be provided as well. But then the central bank should have a way, if it receives a court order because of a suspicion of a criminal activity or something like that, then the central bank should be able to get the records of an account or a wallet or something like that to a court and say, okay, if I receive a court order, I will provide all the detailed information. It's not for the central bank to look at this information, but if the public authorities and with a court order, the central bank should be able to provide this information. And everything subject to judicial review, and we already have something like that in place for fiscal privacy. We already have, we already give all this detailed information to the IRS in the United States, and this is protected by the fiscal privacy laws, and they are enforced. And even if one employee of the IRS, if this person starts looking without any reason, not a professional reason, looking at your private data or leaking this data for any reason, this is a criminal offense, and this will be prosecuted in court. So we have to find this balance, but I think the first step is to acknowledge that absolute monetary privacy will not exist, but we should be able to build this relative privacy protection with technology, with rules and judicial intervention. I think we would be able to create this framework to deal with monetary privacy.
Yes, and as I often see it when these debates are going on, it's characterized as a vertical shift from, you know, more privacy that we have currently to less privacy once the CBDCs are in effect, where really I see it as more of this horizontal shift where, you know, due to the nature of digital, you know, whether it's a private corporation like a bank or another institution, your privacy is already compromised. And as the regulations suggest, governments can come in and pick apart that. Now, having decentralization can offer some benefits of, you know, we've seen like for Apple's case against the government, you know, they're fighting on the encryption grounds. But even still, even with that being said, it really is a moderate horizontal shift that if you have a problem with that, you have a problem with sort of the advent of the way our technology is developing.
And even with cash, we could say, no, but today I have cash, I can use any amount of cash in a absolutely anonymous way. That's not true. First, because unless you go around with bags of money or wallets full of money, it's not something that you do easier. Okay, for $1,000 payment, that's all right, but you're not going around with $50,000 in a wallet. And even so, you have to be face to face with someone to pass this wallet or this bag around full of cash. It's not that it's absolutely anonymous. It's not anymore. And again, in the US, if you make a payment over $10,000, the people selling you something, they will have to file an IRS forms. There is a number there to inform, okay, I received more than $10,000 in cash. I received from this person. I have the copy of the ID card of this person who paid me something because I sold this item or I provided this service. So it's already monetary privacy, I would say, and as you mentioned, is already we already have a relative protection. It's not an absolute protection. So it doesn't make sense that, okay, but now with the central bank digital currency, this protection should be absolute. I don't think that's the way we should frame the question.
Yes, I totally agree. Yeah, and so I want to thank you for coming on. I know we're wrapping up to a hard stop. Could you please offer links and any current projects or writings that you're working on that people can go and find out about?
Yeah, thank you. Thank you for inviting and having me here, Peter. Yes, no, I think the easiest way would be to check the CoinDesk webpage. I'm one of the contributors there, and I have these month articles that I write for CoinDesk. I think it's the best way to find my writings there.
Great. Well, thank you again.
Thank you.